Now I'd like to introduce you to our today's speakers. We have Christina Davila, Research Associate at the Housing Assistance Council. She was one of the authors of the report. Keith Wiley, another Research Associate at HAC, also author and our data guy. And Marvin Ginn, who you heard joining our call at the very beginning. He's the Executive Director of Native Community Finance. And before we get started with Christina, I'm going to hand it over to our Director of Research, Lance George, to get things started.
Thanks, Dan. As HAC's Director of Research and Information, I'd like to reiterate our welcome and let you know that we're excited to share this new report and information. Dan noted that HAC works across rural America, but in addition to that, we've traditionally paid attention to several high-need rural communities, and one of those being Native American communities. HAC has a long legacy and track record of providing financial resources, training, and technical assistance and research to Native populations and communities for going on more than 5 decades. With this report, we're happy to add to that body of work. Christina and Keith will focus on some of the report's findings, but I wanted to quickly note some of the larger approaches or goals for the work. It's been my experience when we speak with Native communities from a researcher perspective, we often hear, well, we don't need another study, or we've been overstudied or studied to death. And while I don't disagree with that, I would note that we think research is important, and there are probably a few findings here in the research that I know were a surprise to us, and a surprise to some of the experts that we consulted with. So we think we continually need to monitor and track the conditions and trends for new trends and new issues that are rising. But at the same time, we are at HAC keenly aware of this sensitivity, and we didn't want to produce yet another report that focused solely on problems or challenges or wallowing in the problems. So while we acknowledge, and you're going to hear a lot of those numerous complications and challenges and constraints, our primary goal with this product was to inform policies and strategies for bettering Native housing conditions, and I do think we achieved that. We would like to thank the Wells Fargo Housing Foundation for their generous support of this research. Without their support, the report would not have been possible. And finally, I'd like to thank everyone who assisted with the research, especially Christina, Keith, and the entire HAC research team. I think they did an amazing job. But we also relied and received amazing assistance from a large number of tribal communities, experts, and members who helped inform and contextualize a lot of the data and findings that we had. We honored to have one of those tribal members who is also unequivocally a national expert, Marvin. He'll join us later on the call to give us his expert perspective on what the data are telling us and what we can do to improve mortgage access lending in homes in Indian country. So once again, we thank you for joining us in this important dialogue, and we look forward to your feedback and discussion. With that, I'll turn it back over to Christina and Keith for an overview of findings. Again, thank you for joining us today.
Thank you, Lance. Good afternoon, everyone, and welcome. Once again, I'm Christina Davila. I wanted to just give you an overview of what we'll be covering today. Okay, so for the agenda, first we'll be looking at the challenges of mortgage lending on reservations. Then Keith will give you some of our data findings from our most recent report that we released earlier this month called Exploring the Challenges and Opportunities for Mortgage Finance in Indian Country. Then we'll get into the federal resources that are available from HUD, USDA, and the VA. Then we'll share some of our recommendations of how to increase access to mortgage lending on reservations. And then we'll have Marvin give his perspective from the field. And finally, we'll have some questions at the end. So we'll have some time for questions at the end. So first, we're going to start off with a poll question. And just to see how familiar you are with the paper already, we'll see if you've already read it, just the executive summary. Just want to get a sense of what you guys already have seen. So I think it's like 15 seconds total, so get your votes in.
All right, I'm going to give everyone just a little bit more time, but it looks like we've got some good participants here.
Wow, 2 overachievers. Great job.
Yeah.
Okay, well, that's great. So now I have a sense of what you guys already know Okay, so then we're going to have one more poll question, more of a pop quiz to just test your knowledge. So how many states have federally recognized reservation land? Is it 10, 25, 35, or 40?
All right, looks like we've got pretty much all the votes in, so I think we can end this
Great.
poll.
Yep. All right, so most of you are right. 35 is the correct answer. As you can see here, there are about 35 states with federal reservations in them. In total, there are 573 federally recognized tribes in the U.S., 326 of which have reservation land. And some tribes share reservations, and then others don't have reservation land at all. And as a disclaimer, these lands are peppered with fee simple land. So as a result, the analysis of our loan data includes some activity on non-trust lands as well. And in terms of who we're talking about, as of 2015, the census shows a total of 5.3 million people identified their race as American Indian or Alaska Native. They make up about almost 2% of the US population, and that includes people who identify with multiple races. Then there are about 2.5 million who consider themselves solely American Indian or Alaska Native. And from our estimates, about 480,000 of those who identify as American Indian resided on reservation lands. So we're going to get into some of the challenges that reservations face when accessing mortgage lending. And this is not to say that all tribes have these issues, but we want to understand these barriers to better address them. And also in this webinar, we won't really get into how the history of the federal government's treatment of tribes has led to these challenging circumstances, but it is written in our report, so if you want further detail, you can check that out. And so some of the circumstances listed here objectively would make mortgage lending harder, but some of them can be ameliorated by having flexible policies and a mindset of collaboration, although that's obviously easier said than done. So the first one we're going to get into is poverty and geographic isolation, which is a very major barrier. The aggregated poverty rate for reservation lands is about 30%, which is double the rate for the nation as a whole. And then along with economic distress, people on the reservation tend to have little or no credit history, which also limits their ability to get access to mortgage capital. And because historically mortgage lending has not been widespread on reservations, there are many people who are inexperienced with the process. And then with geographic isolation, many reservations are located in remote areas. In fact, about 70% of the counties with reservation lands are found outside of metro areas, and then 27% of those counties have fewer than 10,000 residents. So they're in remote areas and they have very low populations, which affects economy of scale. So this has the effect of making building homes and the accompanying infrastructure costlier, which has led to an inadequate housing stock and overcrowding. In addition, there is often extra bureaucracy for mortgage lending on reservation lands. One reason for this is that there are multiple actors. So in addition to the lender, there's also the tribal court and the BIA. The BIA manages the lease approval process and keeps track of property titles using its TAMS, which is the Trust Asset and Accounting Management System. But this system tends to be a little bit more complicated than software used by typical title companies because it's intertwined with other systems that manage probates and monetary payouts, and it also includes family trees and maps of the property. And then mortgage lending on reservation land also has additional requirements, including environmental and archaeological clearances, which slow down the process. The third one is land ownership, which is a challenge. So because of policies stemming from the Dawes Act, land ownership is complex because in addition to trust land, there's also allotted land and fee simple land interspersed. And all of these have different processes of how to go about getting a mortgage loan. And trust land specifically cannot be sold or used as collateral for a mortgage loan, which means that lenders making a home loan on reservation lands think that they're at a greater risk for losing money if it doesn't perform because they can't seize the property. So instead of collateral, loans on reservation lands come with a leasehold interest to the borrower. But that doesn't fit with a standard home loan product and then often requires government backing to limit risk and facilitate lending. And the last one we'll discuss is about mistrust. So Native Americans have a well-documented history of exploitation and mistreatment. So some tribes are hesitant to work with the federal government. Then at the same time, lenders often don't trust working within tribal courts. So in general, working together is viewed as a risky proposition by both sides. And then the lack of understanding and trust has significant ramifications because mistrust can limit the creation of agreements between tribes, lenders, and government agencies. So now I'll turn it over to Keith to discuss some of the data findings we have.
Yes, good afternoon, everybody. I'm going to talk here a little bit about some of the data findings that we have in the report. And for the report, we mainly looked at Home Mortgage Disclosure Act data, and that's the data that's filed every year with the banks, particularly larger lenders and lenders who operate in metropolitan areas. They report their loans for home purchase, refinance, and home equity lines of credit now. And so it's reported each year, and it's down to the census tract level, and we're using it. It has information on the type of loan, the borrower characteristics, and the lender. And so we used it throughout this report. We used the 2013 to 2015 data. And these points, these four things here, I'm going to have a couple more slides to go into a little more detail. But the first one, just for the 2013 to 15 period, there were less than 1,000 mortgage loans on what we identified as reservations, federal reservations each year. And I'm using that number because it's actually some years it was 700. It was very low. Essentially, it was a very limited volume of lending, and nearly half of the applications on reservations were actually denied each year. And that is largely related to the third point there, that almost a fifth of the homes were manufactured homes, and they have a much higher denial rate. And so that means basically 20% of the homes, occupied units now, according to the ACS, on reservations are manufactured homes. And the last point that I want to mention in the following slides about the lenders is just that Native-owned institutions actually play a relatively large role, and I think maybe that's not well understood. That Native lenders are for the 3 years we looked at, 2 of them were in the top 20 volume of lenders on reservation land. So I thought that was really interesting and important aspect to the market. Now the first slide here about the data is just shows the American Indian Alaska Native loans, and what we did was we took the HMDA data and any applicant there's you could mention up to 5 different races, and so anybody that mentioned American Indian or Alaska Native we classified as an American Indian or Alaska Native or Native American for this study, and we wanted to look at the lending over the 10-year period 2006 to 2015 to see if it deviated much from the overall lending patterns. And you can see it actually didn't. This is all the loans, but you can see there was a dramatic decline from 2006 to 2008, which corresponded to the Great Recession, and then it actually stabilized throughout this period, and that's looking at the yellow bar. And then we also broke it down by refinance loan, which is green, pink, which is home purchase, and blue, which is home improvement. And you can see there was an uptick in 2012 and 13 in overall activity. And that was related to the historically low interest rates, and refinancing increased a lot. 2 takeaways from this, and this again is the overall market, is that the level of activity is still dramatically lower today than it was in 2006 before the Great Recession. It's about 40-some thousand loans in 2015 for American Indian Alaska Native loans, compared to 90-some thousand in 2006, so it's about 50% less. And it has it's kind of stabilized, but it hasn't actually necessarily increased back up to the level of, say, like white non-Hispanic lending just yet. And another point I think is important to notice, if you look, the axis here says there's 100,000 loans. And there was actually there's millions of records. So to put it in perspective, there was 40-some thousand loans, American Indian Alaska Native loans in 2015. There was 7.3 or 4 million overall HMDA records. So it's about 0.6% of the loans reported, and that's home improvement, purchase, and refinance, and that they're about, I think American Indian, Alaska Natives are about 2% of the population, so it's about 0.6% of the loans. So it's a very small portion of the lending activity, but in general, the market was relatively similar over those 10 years. And now the next slide, what we wanted to do was we wanted to look a little more closely within. So what we did was we divided the loan activity up based on where it occurred. Now the actual, the HMDA data is located at the census tract level, but unfortunately we're not, the census tracts don't necessarily correspond to a federal reservation boundary. So what we did was we identified and classified them based on whether their center point was in a reservation. So if the census tract, it could overlap, it would have some land in and some land outside of a reservation. So if it had its center point in the reservation, we classified it as such. Those that were their center point was outside a reservation were classified based on if they were within 25 miles of the reservation or they were beyond 25 miles. And what we wanted to do here was we wanted to look more closely at the activity on reservation lands. Again, this is federal reservation lands. And if you see over the 2013 to 15 period, there was each year about 2% of the loans to American and Alaska Native borrowers were actually made on people on reservation lands. And that's an extremely small number. And as I said before, it's about 1,000 loans. Some years it was 600, 700. So I'm using this figure to show it's about 2% of the loans. And their estimate of the population is 9.5% of the overall American Indian, Alaska Native loan and in combination population. So it's a very small percent. If you look at the other two groups, it's much closer. It's the population and their share of the lending is very similar. So it just shows there's an overall very limited amount of mortgage lending activity on reservation lands. And I also want to state here that it's important that I'm looking at this in the aggregate, but each reservation is like any place. It's each one is different. Each community is different. Just like we deal with rural here a lot, and a lot of times people think there's one rural, but it's a lot different. And between like Central Appalachia or the Colonias or Native American lands or California. So this is looking at aggregate, and I think it gives a good picture of what's going on. But each one is unique. So I understand that. That's always one of the limitations you do in a national study. So the activity is limited, and what we wanted to do was then we wanted to look to see if it was also there was high denial rates of what mortgage lending activity occurred on reservation lands as opposed to within 25 miles and beyond 25 miles. And I actually like this figure because what it shows is they actually flip. So if you look at the figures on reservation lands, almost half of all applications each year were denied. But off it's 20, 27, and 29%. And then the originations or the loans made is only 35% on reservations, where it's right near half or over half off. So this shows that there's a much higher denial rate and much fewer originations. So not the volume itself application volume is low, but also that once applications come in, there's actually a higher percent of them are denied. And this is related to the type of housing unit. Are housing units involved largely is being shaped by the fact that manufactured housing units are prevalent on Native American reservations. And so I think we have another question here, a poll question to take people's view on what percent of the originations do you think occur on reservations involve manufactured homes? I think this is a good question. I didn't actually know this myself, and I should have. I worked with the data a lot.
Okay, we'll give it another couple seconds as the answers trickle in here. All right, I think that's everyone.
Okay, and okay, you are actually it's actually 24% the way we cut the data, but it is higher if you just look at home purchase loans. But what we did here is this is all loans, home purchase. refinance and improvement loans. But if you look at it, and you can see there's a stark difference. 39% of all the applications on reservations involved a manufactured home compared to 7 and 6%. And this is American Indian Alaska Native applications. And 24% of the originations did compared to 4 and 3%. And when you cut the data and you look just at home purchase loans, it is much higher. And during our study period, actually, it was increasing considerably over the 3-year period. It increased the volume of loans that actually occurred were manufactured homes on reservation lands. So, and this is an important point because manufactured homes have, no matter where they are, about a 50% denial rate. It's normally much higher. And there's also, they're normally like chattel loans, which have higher interest rates. But in many cases, like Christina was showing in isolated areas, it can be a good option because it may be too costly to build actual stick-built housing units where you don't, maybe it might be hard to get a plumber or an electrician or to get the infrastructure. But when you look at the data, the manufactured home lending actually greatly impacts the number of denials and essentially a high cost lending rates too on reservation lands. And so I found that interesting myself. I should have known that actually more when I got involved in looking at the data. It was clear. Now, one other slide I want to show here about the data that I think is important. It looks at the lenders. And one of them just directly follows, right? During those 3 years we looked at the data, two of the manufactured home lending companies, Vanderbilt and 21st Century Mortgage, were in the top 5 each one of the years in originations on reservation lands, federal reservation lands. So that actually goes to follow the large volume of lending there as manufactured homes. So they're involved in a lot with like Clayton Homes. And that's like, you wouldn't see that for very many jurisdictions, but you do here. And then another point that I thought was very interesting was the native-owned institutions, particularly Bank 2 and Bay Bank were in the top 20 or 25% of lenders during this period. And there's about, I think, 20 Native American or 20 or so Native American owned institutions. And these are really small institutions, relatively speaking. I think Bank 2 and Bay Bank together had about 250 million in assets, but they do a large part of the lending volume. And I think that's really important. And Christina did some stuff with a Rural Voices issue, and we have it in this report too, where she talked to Bay Bank about how they were able to serve the market. I think it's really fascinating. You don't hear much about them, but they play a large role, and an important role in the lending in these areas. And so to me, those two things stand out the most: the role that the manufactured home lenders play, and also the role that native-owned banks play. And so now I'm going to turn it over to Christina, and she can talk about the government efforts to expand access to mortgages on reservation lands.
Christina?
Christina?
Hi there. Sorry, I was on mute. So these are the 3 government agencies that offer resources that are utilized by Native Americans to get a mortgage loan. I'm going to give an overview of these programs and then give an estimate of the number of each type of loan that goes to Native Americans. So the first one is the Indian Housing Block Grant, which was initially created by the by NAHASDA. It's the largest single source of housing funding dedicated to tribes for use in reservation land. And the second one is the Section 184 loan guarantee. This is available to tribal members on reservation lands initially, but the eligibility was broadened to those in Indian areas, which are off reservation, in about 2004, 2005. And you can see that in the graph here. The pink line is the allotted individual trust land, and then yellow is tribal trust land, and then blue is fee simple land. So as you can see, about more than 90% of the Section 184 loans in dollars loaned are originated off reservation land on fee simple land. 3/4 of this lending is concentrated in just 6 western states. 45% of them are done just in Oklahoma, and then there's also Alaska, Arizona, New Mexico, California, and Nevada. Then we'll go on to the Veterans Affairs. They offer a home loan guarantee. This is open to all veterans, but Native American borrowers accounted for about 5,700 of these loans in 2015. And then the Native American Direct Loan is available to Native Americans on reservations. It's a direct loan made by the VA, and the VA has a memorandum of understanding with all the tribes that get these type of loans. It originated an average of 21 loans annually, and it's noteworthy that most of these loans are made in Hawaii and the Pacific Island territories, where they are most successful. And then the USDA Rural Development also has two mortgage products that are also eligible to anybody who is living below a certain income level and then in a USDA defined rural area. So for the loan guarantee, the HMDA data reports an annual average of about 127,000 loan guarantees were made in 2015, of which 752 went to Native American borrowers. And then the 502 Direct Home Loan provides loans to very low income and low income households with subsidized loans directly from the federal government. And USDA data show that there's about 7,000 of those loans made in 2015, and then about 102 went to Native American borrowers, and then 12 of those were on trust land. So I'm going to get into a couple of the recommendations from the paper, and then we'll have Marvin continue the discussion. And before we move on, I wanted to discuss some underlying conditions. So there are 326 federally recognized landholding tribes in the U.S. They each have their own laws and governments, and therefore cannot be expected to conform to a standardized mortgage lending rules and procedures because they each have their own diverse needs. So policies should be made flexible to serve each of the tribes. And then in addition, buy-in is key to any policy success. So tribal members should be offered a seat at the table and be the ones that will be leading the discussion, sharing their perspectives, ideas, and concerns, and ultimately be the ones that come up with a solution. And I know you all probably have some suggestions of how to improve access. So just know that these recommendations just touch the surface of what could be done. So the first one we're going to touch on is ways to improve education for these three involved parties. So for potential loan applicants, they can be made more aware of the loan products for which they qualify. And then having financial education available would make potential home buyers more capable of obtaining and keeping current a mortgage loan. Then for lenders, they could be better informed of how to navigate the process, including tribal lending laws, MOUs, and working with the BIA. And then stakeholders who partner with tribes need to develop an understanding about the tribal norms, processes, expectations, and customs that would facilitate collaboration and ultimately the establishment of a strong home mortgage market. And consideration should be given to things such as the appropriate way to engage with a tribe, a willingness to work within the tribal framework, and an understanding of how culture influences the process. And the last thing is ways to increase capacity. Increasing the capacity of all these involved parties would help them all work together more effectively with each other and with the existing programs that exist. So for lenders, Keith had mentioned Bay Bank, which is a small Native-owned lending institution in Wisconsin. It is one of the largest processors of Section 184 loans on reservation lands. And what makes them so successful is that they have staff members dedicated to underwriting and servicing these kinds of mortgage loans. And because of their experience and understanding of the process, HUD allows their staff to approve certain documents themselves, and that helps streamline the process and allows for more efficiency. And then there's also, it's important to expand the capacity of local nonprofits and CDFIs. So for example, Native Community Finance is approved to package USDA Section 502 direct mortgage loans, and that makes this form of credit more widely available to tribes in New Mexico. And then for the BIA, some offices tend to be understaffed or they have backlogs. So one solution could be outsourcing the title processing duties to the tribe itself. This is done with the Confederated Salish Kootenai tribal staff on the Flathead Reservation in Montana. They have developed a successful working knowledge of the realty functions performed by the BIA, so they have the capacity to make use of Public Law 93-638, which is compacting the management of the land titles and records on the reservation. So the title status reports are produced quickly because the staff in the local LTRO is personally familiar with the allotments, including who the owner is and its location. And so the process is more efficient because the staff have local signatory authority and more control. And the last thing is we should expand the capacity of tribes to exercise self-determination. Tribal members should be able to bring decisions with local impact under local control and to structure capable, culturally legitimate institutions of self-government that can make and manage those decisions. So examples of those programs would be like NAHASDA or the Hearth Act. So I'm going to pass it on to Marvin Ginn to further our discussion about recommendations.
Marvin, can you hear us?
Let's try this. Can you hear me now?
Yeah, we got you.
Dan?
Yes, Marvin, we can hear you.
Okay, I went back to the computer. Okay, anyway, you know, this was good discussion about the problems that we have here on Indian reservations, but we all know the problem. We just can't get this done, so we have to start looking. And most of our products are for low-income people, and that's not everybody on the reservation, so I think that's a challenge also. But I'm here at Native Community Finance. We did a program with the Pueblo of Laguna where we manage a mortgage program funded by the Pueblo. And with this product, we went with ability to repay. We do look at credit, but not at FICO scores or any type of situation like that. And it turned out it's a really good program because we have no delinquencies and no defaults. So that's something that especially gaming tribes might think about if they have any type of funds available. And that's above and beyond, you know, the low income, because that's for everyone. We always have challenges with BIA in getting timely TSRs and NEPA requirements out of them. And the main reason that we have that is they use the TAM system, which is an asset management system for real estate. And I've said this before, it would really benefit all the tribes if they would redo the real estate portion into a steward title or some sort of system like that, where you can get them, you know, get your TSRs and NEPA requirements in a timely manner. The Hearth Act is an excellent example of what can happen when the tribe 638s their money down, but you also have to remember that you're taking on the environmental and archaeological process with that, which is costly, and there's really, if you're a very small tribe, there's not enough money there to do that. So my thought on that one would be get 2 or 3 smaller tribes to join together and do the Hearth Act together, and that way their combined 638 money might be able to fund it. So there's several different things that we can do, but it's all a matter of time and persistence, and I think a big part of it is education, because we need to educate our tribal leaders and also our clients that it's going to take a while to get there, and hopefully you know, be able to get the process done. I've got right at the present time, I've got 6 construction loans going at one time here but we've got the process down where we can do them, within 6-7 months, which is really good as far as in the Indian country goes. But it's thinking outside the box. We just have to get away from the ICDBG, the low-income housing tax credits, and think how we can do it above and beyond this low-income, medium-income guidelines, and figure out other ways to do it. And that has been what I think is a challenge all the time, is that we're thinking low-income when we should be thinking like they do in the Western world, is that there's a process for everyone to get a home. And even though it's trust land and everybody has their mortgage codes in place that is participating, it can be a good product. As far as manufactured housing anymore, I think it's an excellent product. If you put it on a permanent foundation, you're going to find that it's a house. It's not a manufactured house. It's a factory-built house, and they will last as long as a stick-built and Energy Star type. So depending on how far you are from factory and the cost, in some areas it's really cost-effective, in other areas it's not. So, that's something, but we need to get away from the mindset of manufactured housing, because it's factory-built housing and they're built very well. But those are just some of the things that we do here in New Mexico. And like I said, the past 30 or 28 loans that I've done, only 3 of them have been stick-built. So that's another thing that you have to look at. And so education of our tribal leaders, our clients, and make sure that they have all the codes in place, and this should work out fine for everybody. Back to you, Christina.
Thanks, Marvin. I think we're going to move on to questions. So if you guys have any questions, feel free to chat them in the little box on the right corner.
All right, and we do have a few questions that have come in already. One of them is, how well do HMDA data capture this lending? Are many of the lenders small enough to be exempt from reporting?
Yeah, that is, this is Keith, and that is, that's a concern of ours. Yeah, because HMDA has exemptions for filers, and if you operate entirely outside of metropolitan areas, or if you have a really small asset total, you actually don't have to file loan data. And in general, most people think maybe it's not, it's a small amount of loans and maybe it doesn't matter a whole lot. But for certain rural areas and rural communities, I think it likely does. And in the Native American reservations, I think it could, because if you're talking about 600 loans and just a few lenders don't report, you could be missing a sizable number of loans. This is one of the real cases where I think it really does matter that they don't have to report. So I think that's true. And I think another point about the data, the HMDA data, is especially looking at reservations, is the boundaries. It's in a census tract. It's put into the census geography of census tract, and that doesn't perfectly match up with reservation boundaries. So it makes it difficult too, because you're always you're trying to approximate what it would be. So this tract has part of the land in and part of the land out, and so you have to make an assumption or set some rules that you're going to consider reservation land or not, and you're going to count everything. And also with checkerboarding and some of the stuff Christina talked about, it's a real challenge to get the information. I think in general the data gives a good picture, but yeah, there's definitely limitations, and there's like the CDFI activity and stuff like that too, that probably should be looked at. That's not considered. I don't know if Christina might want to mention that, but yes, I definitely I think the HMDA data is a good data source, but I do think that's a serious limitation. It's particularly important here, and to be honest with you, I wish they did file data. All lenders filed mortgage data, and also the the fact that the geographies don't match up creates a challenge.
And just to add, we had that the top mortgage lenders on federal reservations were Mid-America Mortgage, which do 184 loans. Then number 2 was Wells Fargo, 3 was Vanderbilt, which is the manufactured homes, 4 was Flagstar, and then 5 was Baybank, which was that native-owned institution.
Okay, we have another question. What role does sovereignty play in mortgage lending?
Keith, do you want to take that one?
Yeah, I can. Yeah, it's and Christina and Marvin can certainly chime in. It definitely I think it definitely matters, especially with regards to the loan. The land can't be used in as collateral, and so there's a lease with the land. I think it can, as far as mortgage lending, it can definitely be a challenge, or raises a cost in the activity. I know there's some good research out there. There's an interesting paper about the Agua Caliente in Palm Springs, and about just because you do have that kind of agreement, or that kind of system, doesn't mean it can't work. I think it can work, and it can be done effectively, but it puts another element to it that and I think a lot of times maybe lenders aren't used to working that way. Like they're more used to a standard product, and maybe that's more of an issue. But maybe Christina and Marvin can talk about it with regards, like sovereignty and the land ownership as regard to mortgage lending.
Well, if you want me to jump in, I can do that. On this, as you know, you cannot encumber trust land, so we have to go through a process of a leasehold mortgage. And many lenders aren't comfortable with a leasehold mortgage, but if you look at the mortgage codes that the tribes put in place, normally it's a good system. What we found here in New Mexico is a lot of the mortgage lenders they don't want to do the construction loan, which NCF, our organization, will do the construction loan, and they just do a takeout. So we have all of the documents in place for them. But in order for a tribal member to get to that point, they have to go through either their war chiefs, marilumas, whatever office controls the land. They have to get a land assignment, and then get that surveyed, and then get it turned into a lease that is approved by BIA and the tribe. And then you go through a whole other process. We worked on a process chart for every tribal member to do, but it's mainly the banks are nervous about lending on trust land. There's that old thought that they could never get their money back if it was foreclosed or this type of thing, and couldn't resell the property. But I believe on the 184s, which have been done on trust land, I think it has been quite a successful program, because the sovereignty entered into it, but it also moved the process along so that the banks could recover any asset that they had lent on trust land.
All right. Thanks, Marvin. We have another question. Do native-owned banks lend to individuals in different states, or in a different state?
I do know that Baybank serves, so they're based in Wisconsin, but they do serve Michigan, Minnesota, Wisconsin, and Illinois. I don't know if they are native borrowers or not, though.
Yeah,
I know Bank 2 does. Oklahoma, New Mexico, Arizona, Colorado. So
All right. Thank you. And one question we have is, can I find specific information about my tribe in this report?
As we mentioned, it's most of the data is in the aggregate, so we don't have any specifics about particular tribes.
Yeah, that's one thing when looking at the data. Yeah, you look at it in aggregate a lot of times. Like I can't stress this enough. You know, every area is different. We have it a lot when we deal with rural places because you know rural America is almost all of the land mass, and so yeah, every place is a little different, and so it's tough sometimes when you're doing analysis for rural when it's a lot different. The Mississippi Delta and Colorado, the Rocky Mountain region.
But
Yeah, go ahead.
if the Federal Reserve Bank of Minneapolis does have a resource, it's called Reservation Profiles, and you can search it by search it by reservation, and you can get demographic information. And then there's also, they just recently added data from HMDA, which is where we got most of our data from. So that's a really good resource for you to check out.
Yes, yeah, I completely agree. Yes.
Okay, great. I'm only seeing one more question so far. If anyone has anything else to ask, please go ahead and add it to the Q&A. But the last question is, why did we notice, or why do you think there's such a high denial rate on the mortgages?
Well, I can probably answer that. When I first started doing the 184 back when I worked for the bank, it took me an average of about 100 applications to get one person qualified, and that was due to credit. And so it's a real challenge that we need, more financial education so that people can get moved around into a position. Because no matter what, mortgage lending is pretty much in a box, and if you don't fit in the box, you're going to get denied. It's about credit, it's about stability of work, it's about income, but credit is the big one, and that always seems to be the challenge that we run into when we're trying to put our tribal members into the box is the credit score.
Yeah, I can just follow them. The HMDA data support that too. They have denial reasons given there, and the credit is the main one, credit history. And I think Christina talked about that some too with maybe some of these reservations areas there. Mortgage lending hasn't been common. It's more recent thing too. So I agree with Marvin. Maybe credit counseling and stuff, but in the HMDA data, it clearly says that's the number one reason for denials.
That's also, isn't that the reason for most denials in the general population?
Yes,
also?
it is. It's in the general, but it gets some of the stuff it's a little different. But yes, that's generally that and employment history and stuff. There for a while during the financial crisis, there was some issue with collateral when people were underwater. It didn't reach to be the status of being the number one reason, but it was a big reason. And also, when you're dealing with manufactured home applications, there's a lot of them. There's just a high denial rate anyway, so that kind of inflates it. I think maybe they send out multiple applications to multiple institutions or lenders trying to get money, so that might inflate the number even a bit more. But yeah, that's the number one reason normally for most loan denials.
We have a comment before we wrap up from Lorelei Sanchez of the Zuni Housing Authority in New Mexico. She says that the Zuni Housing Authority has been successful with the USDA self-help program, 14502 loans, and said that continued education is a must. So thank you for that perspective, Lorelei. And I'm not seeing any other questions come in, so I believe we can go ahead and wrap up for today. So I'd like to thank you all for joining us for today's webinar. Remember that the PowerPoint and recording of the webinar will be available shortly on HAC's website, which is ruralhome.org. While you're visiting the website, if you haven't already done so, I recommend that you click the Get the Hack News button so you don't miss out on announcements about events like this or publications like the excellent report we are speaking about today. If you have any questions for our speakers, please feel free to contact them at the contact information you see on the screen. I'll leave this up for a little bit so everyone can take down the information. But thanks again for joining us, and enjoy the rest of your day.